Currency wars. Do they really exist, or are they an excuse for economic failure? To some FX commentators, not only are they real, but central banks have actually constructed a currency wars truce to calm global markets. Well, one such commentator who believes that central banks are giving peace a chance is Dominic Bunning of HSBC. Dominic, first of all, what's the evidence for currency wars?
Well, I think there's a number of different signposts we can look at in the last few years. We had the BOJ printing some 80 trillion yen a year. We had the ECB going down the QE route, causing both their currencies to weaken aggressively. And it's fed through into EMFX to some degree as well.
Let's have a look at our first chart to demonstrate that.
Yeah, absolutely. I mean, we've seen, particularly since late 2014, but even before that, EM currencies have done pretty badly on a global basis. And I think a lot of that fear around EM was coming from a competitive devaluation risk. So we saw easing in the ECB and the BOJ, and there were fears that EM economies may struggle if their currencies stayed strong to be competitive. And that really came to a head late last year, 2015, when there were big concerns about renminbi devaluation. And you can see here the kind of acceleration lower in EM currencies in late 2015.
And also, in 2016, the start of the pickup in EM. So we've talked about the currency wars. What about the currency wars truce? What's been going on this year? Let's have a look at our second chart, perhaps that helps you explain that.
Yeah, well, absolutely. We've seen over the last few years quite a lot of volatility coming through. This is in emerging market currencies, but also in global markets generally, as we went into various central bank decisions and so on and so forth. And it seems in the last few months there's been something of a simmering of those concerns. We've had high volatilities, as we can see, but I think central banks and policymakers globally are sort of saying, you know, we need to just calm things down a bit here. It's going to be hard for us to hike aggressively for the Fed, for example, given markets are very volatile. And now we're starting to see signs that truce is coming through. The ECB, yes, they're still easing, but it's very domestically focused. The same with the BOJ. And with China, you're seeing a very stable renminbi at the moment.
And the third chart tells us what the Fed impact has been. There's the dollar rising over since 2014. Again, it's coming off lower. And again, you're seeing that the Fed action probably is the most significant of all the central banks in this currency wars truce.
Yeah, I mean, the market is certainly focused on the Fed at the moment and looking as to when that first hike is going to be. The next hike is going to be, I should say. And clearly that delay in the Fed, the dovish language at the last meeting is causing the dollar to soften somewhat, and particularly versus emerging markets. And I think the key thing here is what we're seeing is that with a truce in the global currency wars, with the BOJ not trying to weaken the yen aggressively, there's a lot less fear about the renminbi devaluing aggressively, and therefore emerging markets are quite calm. And when they're quite calm, that's a good time to buy EM. It's a good time to be long carry.
So we've had currency wars. We're now having a currency wars truce. How long is this going to last? How long will investors think that this is going to hold until someone might break it?
Well, I think certainly the next few months there's a very strong chance that we see a continuation of the current themes. Volatility should sort of start to come off a little bit more. Emerging market currencies will do well in that environment when there isn't a strong trend. So with the Fed likely on hold through to June, that's going to create a relatively calm environment. With the BOJ and the ECB, again, unlikely to do anything aggressive in the coming months, that's also going to feed into this calm environment.
But those two could break it, or rather the BOJ in particular could break it, and the Fed will eventually hike at some point this year.
Yeah, there's absolutely a risk that one of these central banks decides that growth locally is not strong enough or inflation is too low, and therefore they need to do a lot more to try and stimulate either domestic growth or inflation. And that could lead to further easing. But what we've seen in the last few months is certainly that there seems to be a little bit more of a calming amongst those currencies, and certainly something of a truce between those central banks.
Currency wars truce for the time being. We'll see how long it lasts. Thank you very much, Dominic Bunning.